Yeah, good morning, guys. I hope you're all doing fine. Yeah. I'm also doing good. And it's another day, another way to get paid. So here we are. We said today we are going to trade the London session, right? Yeah, so real quick, on a daily time frame, we're inside this fair value gap between this candle and this one and this gap. As you can see, the body of yesterday's candle closed inside this fair value gap. So the wicks usually do the damage, but the body tells us the story. So this level and this level, when we go down to a lower time frame, to be this aqua zone, this level, and this one. So when you go to the lower time frame, these are the levels, okay? Fair value gap low, fair value gap high. Right. So on 1 hour time frame, so these are the levels. This is the fair value gap high. This is the fair value gap low. So inside that, we have a 1 hour inversion fair value gap, very strong support, very strong support. And so these are 1 hour inversion, and we inside the inversion, we have a bullish order block. So which are the high probability order blocks? An order block within an imbalance, or an order block within a fair value gap, or any fair value gap inside the inversion. Okay, this one is a very strong order block because it's inside this inversion, which is a very strong support. So yeah, and overall we are within this daily fair value gap. So these PDRAs are in. For our targets, we are targeting buy side short term, but mainly we are targeting previous week high, which is the base liquidity or our drawn liquidity. So overall, draw today and tomorrow, we hope to reach up here, the previous week high. So that's our main target for the week. Beyond that, we have the weekly bearish order block, main threshold. That's the midpoint of the weekly bearish order block. And above that, we have external buy side liquidity up here. So these are the levels we will be watching out through the week. But for short-term targets, we have yesterday's high, which is buy side liquidity, and plus the CPI week. This one was the CPI release, buy side liquidity. Right. So if you have those levels, we go to a lower time frame. That's the 30 minutes. In 30 minutes, we can see that we have this is the 30 minutes inversion. So we have 30 minutes inversion, 1 hour inversion, the bullish order block, which are all within the 1 hour fair value gap. So this is a very strong buying zone. So remember, we caught the low of the week. So if you are still holding those trades, I said we are going to hold them throughout the week. That's yesterday, today, and tomorrow into Friday. Okay. So yeah, we caught the low of the week. So our trading plan was like yesterday we were going to hunt for the low of the week, which we did, and we are in that trade. So we can add more positions up here in this London session. And why are we trading the London session? Because we have pound gross domestic news at 10. So in 4 minutes time, those news will be released, and that's why we are going to hunt in London. So far our trading plan is going according to our plan, I mean. So on Monday we stay out, don't engage, which we did. Tuesday during CPI at 15:30, hunt for the low of the week. We did get the low of the week entry down here. And today we are going to trade the London because we have gross domestic product news at 10, which will be in London session currently. And tomorrow we will hunt PPI at 15:30. It will be a good day to hunt for expansions higher. Okay. So yeah. So I hope you're following your trading plan. and our trading plan all together. And yeah, so we are going to reside in 15 minutes. Sorry, we are going to tape read in 5 minutes. So right before 5 minutes, we have 15 minutes. So the whole Chelsea model, the midnight opening price is right there. So opening drop to create the low of the day. I would have loved for the market to reach for this bullish order block before rally. But if it comes out, the news comes out and pushes higher, of course we expect that, okay? Yeah, so we expect the news to give us buys. So any drop is a fake move, yeah? So midnight opening price below is the low of the day, and we hunt for those low of the day entries, okay? So we are going to use the 5 minutes for tape reading and execution. So I'm watching these levels. I'm watching the 30 minutes inversion, the 1 hour bullish order block, the 1 hour inversion, which is in red. So we go to 5 minutes. So the news come out in 2 minutes time. All right. So here we are, and this is the London session, London Q zone. That's from 2 a.m. to 5 a.m. It's where we are interested in. So it's like we had a market structure shift right here. Fair value gap filled, revisit to the fair value gap, and we are pushing higher. But we will wait to see what the news bring. The news might come out and push us higher, especially after market structure shift right here. Fair value gap. We had this bullish order block inside this fair value gap. We had a revisit to the fair value gap and the bullish order block. Overall, I want the news to give us buys, okay? So even if the news come out and drop, this is the final line of defense. Otherwise, I would love the news to push us higher. And yeah, so the news basically will give us buys, okay? All right, with everything aligned, yeah, the news should give us buys. So if this market respect this market structure shift, which was formed prior London Q zone, so the news are out, the news are out. So if we close above this candle closes above this candle, this will be our bullish order block, and we will not concentrate down here, okay? So yeah, all right, so this 3 a.m. New York local time. So let's see what the news offers us. So if we go down, this is the last line of defense. If we push higher, this candle is our bullish order block, and we will use it for longs, okay? So let's see. So the news are out. The news are out. So and for the targets, we are targeting. So any drops is a fake move. Any drop is a fake move. We are targeting the yesterday's CPI release high. This is that because this was CPI right here. So this high, yesterday's high, going higher to previous week high. So that's will be our targets. So as I've said, any drop is a fake move and should be considered as an entry. Okay. Yeah. So let's watch. If we close above that the bearish candle, that big bearish candle, that will be our bullish order block. And we will have created the low of the day, and we will be creating the body of the candle. Okay. Yeah, so let's see. So I'm focusing on this candle, either the low here or the high here. If we break above here, then this candle will be the bullish order block, and this candle right here will be our breaker block. Okay, so we'll have a breaker block plus a bullish order block, and those should be our entries for buys. Okay. So we are at the midnight opening price. That's the opening price for that candle. So below, that's the low of the day. Above, we will be creating the body of the candle. And yeah. So all attention on this candle. So close above, we will have breached above the midnight opening price, and this will be our bullish order block. This will be our breaker block. Okay. Close below, we are going for this higher time frame PDRA, which is our 1 hour order block right here, which is also inside that 30 minutes inversion, and also the 1 hour inversion. So yeah, but across above here, then we can go long in this candle. Also, usually have the London silver bullet, which is from 3 a.m. New York local time to 4 a.m. New York local time. So within that time window, within the Q zone, we will have a mini Q zone that's from 3, currently we're in 3 to 4, okay? So we will probably get that set up. So we have like 2 hours before we conclude the session. That's from here to up here. So that's from 3 to 5, 3 to 4, 4 to 5, 2 hours of hunting, okay? So you concentrate on this kill zone and you must wait for your setup, okay? So we are hunting. Currently we are hunting. Stay patient like a sniper. Don't do anything until price confirms what you are looking for. So our confirmation is if we close above here or close below here, we are going for this. Then right here, we will hunt for a new setup. But across above this candle, this is the bullish order block, and we will use it to go long, okay? So you must wait, yeah. So you must be very, very patient. So close below here, we are coming here. So I'm also paying attention to this fair value gap, this one, which we had after the market structure shift right here. So I'm also watching that fair value gap. So the reason the market is behaving the way it is, it's because this is the midnight opening price level right here. So you expect such, yeah. But a breach above that, now you're going long, okay? So you have a market structure shift, which was outside our kill zone, but I revisit to this fair value gap. So I'm watching to see if we close above here. So this candle, the 5 minutes candle looks promising. So, but we will wait to see how it closes. Yeah, we can't confirm until a candle closes. Okay. Yeah. So we wait until it closes, then we confirm if we will close above here. Also, a close above the midnight opening price confirms the buys. Okay. So yeah. So as I've said, if we close above here, this will be our bullish order block, and this will be our breaker block. This candle right here. High, low, high, shape, then rally, making this a breaker block. Okay. So you see what I'm talking about? We can't tell until a candle closes. Okay. Can't really tell how a candle closes until it closes. And when it closes, that's when it gives us enough information. Okay. Yeah. Example, this candle is closed below the midnight opening price. Okay. So we have not yet broken above here. Also, again, if we close below this fair value gap, it will make it an inversion level. So it will be used for shorts. It will be used to sell the market into down here. Okay. If we close below this fair value gap, okay, it will be an inversion and a strong resistance. Okay. Also note above the midnight opening price, we have this gap, the fair value gap right here. So yeah, it's reasonable for the price to reach for this. Okay. So if we close below this is an inversion and it's a strong resistance, and the market will reach for this. Also, this is sell side liquidity right here. So we will sweep sell side liquidity back into that 30 minutes inversion, back into that 1 hour bullish order block right here. We will get another nice setup right down here. So currently we have swept the sell side right here, or through sell side swept. So that candle closed below this fair value gap. So this is an inversion. So right there, we are back into that 30 minutes inversion. And right there, we are back into that 1 hour order block, bullish order block. So let's see what we get from here. So on a lower time frame, that's where we can hunt for setups in 1 minute. But let's see. digging deeper into that order block and the 1 hour, the 30 minutes inversion, and also into this bullish order block. Let's see what we get. So I'm watching to see price reaction of these levels, because these are strong support levels. We have the 30 minutes inversion, we have the bullish order block, the 1 hour bullish order block, plus we're also within this the 1 hour inversion. Okay, so a strong support, and we should get a reaction of these levels for buys. Okay. All right, so I'm looking up, back. I see this fair value gap between this candle, this other one. I'm also seeing inversion. So we should get something like a reversal down here into this, get a rejection of this level, drop again, then momentum push higher, breaking these levels upwards. Okay. All the time you are watching and doing nothing. You're just reading price to see what it offers. Okay. Remember, we are hunting for buys. Okay. So right here is where I go to 1 minute time frame to see what it's overing. So my entries today will be based on a 1 minute time frame. So let's see. So we are in a 1 minute time frame, and this is where our setup will form. Okay, so I'm watching this swing high up here. If we breach above there, that's a market structure shift, and now we can start hunting for longs. I mean, we can start hunting for entries to go long. I'm also watching this little fair value gap between this kind of a breach above there. That's an inversion level. So currently it's an inversion level right there. So if the market dips there again, expect an expansion higher. Okay. Market dips in this is an inversion level, should expand higher. Actually, if it dips there, buy there, okay? Buy right there. So if the market dips here, right there, you can buy. And trust your stop loss just below here, okay? Right here. So you must be super what? Patient and what now? Okay. In timing, yeah. So when the market dips there again, buy, okay? So currently we have an inversion, which is this between this candle and this carried through. It's inversion, so a strong support. And we also have a fair value gap between this candle and the next one. So this was the buying zone. This is the buying zone, and the stop loss is below, just below here. A very tight stop loss, and trust the market is not coming down here again, okay? So from down here, now I'm watching up here, okay? Watching up here. So this is that bullish order block level right here. So we breach here, market structure shift, but expect some form of resistance on this level, okay? Right here. So right there, that's some market structure shift. So if you have taken your buys down here, your stop loss is right here, okay? This is a market structure shift, confirms bullishness. So the algo is now bullish. Yeah, so very bullish. So all this drop, this was a fake move. We call it a Judas swing. Okay, it's a fake move. Anybody who has chased this move, they are on the wrong side of the market, and we are on the right side of the market. Okay, so our buys right here, stop loss right here, and now we can push higher, especially with the confirmation of a market structure shift right here. So do you see how I use time frames? If the higher time frame doesn't have over good setups, I go to the lowest time frame. That's where I hunt for those tight stop loss. Yeah, be a sniper. Be very patient in these markets. Okay, be a timing PhD. Okay, yeah, you must learn a market timing. That's why time comes before price. To me, I observe time more than I observe price. Okay. So all those PD arrays mean nothing to me without time behind them. Okay. Yeah. So you must be a timing master. Okay. Timing PhD level of timing. Okay. With that, it means you must be very patient and read what price is the information price is giving you. Or this while, as the market was dropping, we were hunting for buys. Okay. Now we got our buys in here. In this candle give a institution order flow entry deal into this inversion. So also in timing, you must be very super disciplined. So such that when the market tips right there, you buy. But if you missed here, this was another entry into this candle. And the stop loss is right here. Believe me, these are very tight stop loss down here. Okay. Very tight stop loss. So I'm watching this fair value gap. Right there. And plus we have another order block right here. Sorry, fair value gap, yeah. So we have this fair value gap, yeah, this other one. But I'm interested in this one. But the market might dip into this fair value gap, return into the 1 hour bullish order block, and you can expect an expansion from there. Plus this candle, you see this 1 minute candle is another bullish order block. So we have a lower time frame order block inside the higher time frame order block. We have market structure shift, and yeah. So also observe how the bodies are crossing, okay? The close of the bodies will give you the story. The weeks will usually do the damage, okay? These weeks will do the damage, but the bodies, they are crossing within this fair value gap. So that gives us the story. So this is just a consolidation before another expansion higher, okay? Yes, we call this accumulation stage. So first stage accumulation on market maker buy model, but that's advanced. That's advanced. Don't think I have taught you that, but what I have taught you is enough to get you going. Okay. So we're coming back to this. This is the 5-minute inversion. So expect some form of resistance up here. Okay. Up here, expect some form of resistance, but eventually we will break below above that. And you see this candle right here, this candle. This will be our breaker block. Okay. This will be our breaker block right here. So we have 1 more hour before the London Q zone cross. So we have 1 more hour before the London Q zone cross. Okay. So back into the consolidation, now the expansion coming. Also, this candle, which was in this consolidation, and this is the bullish order block. So it has been revisited right there in return to this consolidation. So this next candle will be our propulsion block. This candle will be the propulsion block. And across above it, we expect it to be used as a support stepping ladder to push us higher. Right, back into that, this is that 5 minutes inversion, so expect some form of resistance, but if we don't get a resistance and we break through that, then we will use it as a support and rally. But yeah, I would expect some form of resistance. If we don't get it, then we are really bullish, and breach above it then sets us for a break above this order block, making it a breaker block upwards. Okay. Right, so let's see our price plays out in this inversion level. Overall, I would expect a break above it because now the order flow is bullish. Yeah. Oh, now this is good. Close above this inversion level now makes it a strong support. Strong support. And do you see what we have? We have this gap, this between this candle and the next one, we have a value gap. So if we get a return into that, it's another long going upwards. But this gap can be left unfilled since we have breached above the inversion. This level can be left open like that. Okay. Right, this is good. Now watch here. Now this, my focus is in this candle. This is a bearish order block. If we break above it, it will be an inversion. I mean, yeah, it's an inversion of a order block. We call it a breaker block. So I'm watching this candle now. As a potential breaker, okay, breaker block. Let's give it another color. It's better. So of course you expect some form of resistance before resuming going higher, okay? Because that currently it's a bearish order block. Break above it makes it an inversion, and we call that a breaker block. Okay. Also, we are at that midnight opening price. So we have created the low of the day there, right there. Entry was on this candle. Stop loss is below here. Now we are rallying higher. We are almost out of that low of the day week. And we are getting above the midnight opening price, and we will be creating the body of the candle. So of the daily candle. So breach above this will be a breaker block, and it will be used as a strong support before rallying higher. So expect some form of resistance right here, deep into this, then we can push higher. But I would love to see this gap left unfilled. Okay. Yeah, because we have energetically run through the 5 minutes inversion. Now it's a strong support. This gap should be left open. Okay. But if we revisit it, it's another entry for longs. Okay. So this was accumulation, right? So this is reaccumulation. We call this reaccumulation. Under this market maker buy model, this is the buy side of the curve. Okay, right from turning point right here. So this is smart money reversal, first buy, accumulation, reaccumulation, and this consolidation is just another consolidation inside the breaker, because this I expect it to be a breaker before another expansion hikes. The same way we had a consolidation right here for this expansion. So another reaccumulation before expanding higher. This is good. This is good. So we have breached above the midnight opening price. Expect this candle to be broken up and make it a breaker. Also expect to see a fair value gap between this candle and the next candle to form. Next candle. So we have a fair value gap between this candle, this current candle. And so we will use this as our unicorn. Remember the unicorn. So it's a fair value gap inside the breaker block. And also breaching above the midnight opening price. Now this is good. Don't expect the market to breach lower, okay, below the midnight opening price. So currently we are creating the body of this candle, okay, creating the body of this daily candle, the daily candle, okay. So yeah, so they expect now we have a gap, this gap, the fair value gap is inside the breaker block, and plus at the midnight opening price right there. So this is another gap. This is another long, now very, very strong entry pattern inside this zone. So expect an explosive expansion out of here. Expect an explosive expansion out of here. Mm. So here's our move. And again, crossing above this candle, this will be the bullish order block, this candle. To also be inside the breaker block, okay? But this is the unicorn pattern, a very high probability entry pattern. And now throughout the day, this thing, the unicorn will push price higher, 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 okay? So currently this is our bullish order block, this candle, okay? Just don't want to draw too many lines in here. So this is just another consolidation around the unicorn and the breaker block. So you would expect another expansion going higher, okay? Now, these two down cross candles right here is my bullish order block. Okay, this is my bullish order block right here. Back to the bullish order block. That would be another entry if I was pyramiding for longs, but our entries is down here, so we rate it. We rate it run. Okay, so no need to get other entries up here. Guys, this is the entry. This is another entry, and we can now rate it run. For the rest of the session, we're just reading and seeing how price is delivering algorithmically, I mean. Yeah, so So, and again, this level up here, this is the daily fair value gap high. Okay, so expect some form of resistance up here. Expect some form of resistance, and then we breach above it. Yeah, breach above it because our target zones are up there. The buy side liquidity pools. Okay. So this is my next bullish order block. These three down cross candles. This is my next bullish order block. After these two down cross candles, this is the next bullish order block. Okay. So do you realize that we are using these PDRAs real time, real time? You're not waiting for them to be revisited. I don't know, next week or next session. We are using them real time. Now this is market making. Okay, this is market making. All right, so we have a fair value gap in here. It's of interest to me because if we get some form of resistance up here, you can dive into this before pushing higher. But this is my next bullish order block. My God, did I move this one? Damn. Did I just move that one? Damn, that's messy. Let me see. Oh yeah, yeah. Back to its level. Back to its level. How you do that? Just redo right here. Just redo to undo what you have just done. Okay, the mess you have just done. But this is the high end of that daily fair value gap. Expect some resistance there. But now I'm watching this fair value gap to give us an expansion higher again. So you have this bullish order block. So fair value gap, bullish order block, push us higher. So the London kill zone is coming to a close in like 17 minutes from now. When it closes, then we close our charts and let the trades run throughout the day, or you can take your profits for the London session. And we wait for the New York session. We continue the same bias. Okay, so we hunt for a retracement into New York, then continuation higher. Okay. Bullish order block. Bullish order block. Fair value gap. Actually, let's draw them. I'm just avoiding to draw too many lines, but let's draw them. First, we have a fair value gap. So which order block is high probability order block? Another block with a fair value gap, or another block inside a higher time frame PDRA, strong order block. So in this scenario, bullish order block plus fair value gap, high probability order block. So now with the return to this bullish order block and into the fair value gap, can breach above here real quick, like a big explosive expansion above the high end of that daily fair value gap. This right here. Otherwise, if you are as an intraday trader, you don't have to get the whole range of a daily candle. So you can, since your entries are down here, stop loss below there, this high head of the daily fair value gap can be your first take profits. And it's a good number of pips from down here all the way up here. But I love to swing intraday, yeah. So I will hold my trades throughout the day up to the daily close. So because I'm targeting higher time frame liquidity pools up there, okay? So yeah. So it's up to you. When you feel that your profits are enough, you just exit the markets. But you exit at logical levels, okay? Exit the you take your profits at logical levels. I mean, yeah, so that's it. So this is a typical behavior of a Q-zone close, whose our Q-zone close is in like 8 minutes. So we're back into this breaker. But overall, don't expect a price to close even below the unicorn or the midnight opening price. So we're back into this breaker, this bullish order block. So in this scenario, this is a reclaimed order block where it's used more than once. So we are back inside that breaker, and of course expect resistance. I mean support, strong support from these levels. Okay. So expect a strong support of these levels, the unicorn, the midnight opening price, the breaker block. So price should not close below those levels. Okay. All right, so this is not looking good. So if you are a London trader, should be exiting positions right now. Okay, should be exiting your positions right now because the PDRs have started failing. So that means no good. So as a London trader, you should be exiting your trades right now. So a dip below the midnight opening price, it's not good. So exit your trades. So London Q zone crosses in like 2 minutes. We'll also close our charts, but close those trades, okay? So, but overall, I expect a bullish day, okay? Expect a very bullish day. So we will hunt again in the New York for a continuation higher, okay? We'll hunt again in the New York Q zone for a continuation higher. Right there, we have our Q zone close, and yeah, we can close our charts all together. So myself, I'm not closing the trades, yeah. But I'm teaching you to be cautious because if you are a London session trader, now your profits should have been taken off up here, okay? But I'm with the long-term order flow, the higher time frame order flow. That means overall the market is bullish, and this was the optimal entry for today. So I don't expect the market to come down here, okay? So me, I'm holding on to my trades. I'm holding on to my trades, but for you can close with those profits, and we will proceed again in the New York. We will hunt for another setup and another continuation higher. So with that, I wish you all a good day. Let's meet again in the New York kill zone. We hunt for another setup. We kill it like usual. Okay. So I wish you a good day. Enjoy your afternoon, and be safe. Be safe. Okay. Right. You're welcome, guys. You're welcome. So much welcome. So much welcome. So yeah, with that, I wish you a nice time. Be safe.